Bitcoin savage retreat from 126,000 back in October to its recent lows of 60K have many scared that the bear market is here and that it's going to be another long crypto winter. And that may be what's going on. I'm going to share with you something most people aren't looking at and see if that changes your mind, that perhaps this pullback is just a massive pullback to get rid of all the leverage before we really run. Now, today we have Paul from DevvExchange joining us to take a look at price action and see what we can see. Welcome to the Crypto Rain channel and our family. Now, have you ever worried about money? What if you did the right things so that you really didn't have to worry about money in the same way again? How would that feel? Because isn't that really why we came here into crypto? What if you learned the right ways to use some of your money to work for you just right so that you never had to worry about money again? I grew up poor in life with secondhand clothes, packed lunches every day for school, like often a bologna sandwich, every once in a while a tuna fish sandwich, or peanut butter and jelly because couldn't afford school lunch. And it isn't bad to grow up that way, but I realized that the true value of money is that it allows us options in life. And it can also decrease that gnawing worry we carry of how do we meet all these financial obligations? And perhaps maybe even afford the nicer things in life we want, the travel we want. After a few months of being in crypto, when I started 8 years ago, I recognized that crypto investment done right had the most amazing, massive potential to have your money make money for you, and to allow us to get to a place where we don't have to worry about money again, at least not in the same way. Now, after 8 years of being in crypto, I know that crypto can and will change your finances and your life, but there is a huge catch. Because crypto investment works amazingly well towards your goals when you take the right actions. But if you're taking the wrong actions, it often won't work out well for you at all. While being in crypto, I learned something troubling. You see, I know people that have been in crypto even longer than I have, and they're still stuck about where they started 9, 10 years ago, barely getting by. I also learned that 95% of people in crypto don't meaningfully make money, or they flat out lose money. Only 5% of crypto investors make those life-changing gains that take them into the lifestyle we all dreamed about as kids. But haven't we learned in life that if you find what the successful people are doing and you copy how they do things and how they think about things, you start having their results? So when I was newer in crypto, I focused everything on figuring out what those 5% did and to then put it into practice myself. And by 2021, using those principles, I was able to fire my day job, move to the city I wanted, put myself in a position to never have to work again if I didn't want to. Now, here in this channel is where I share what I learned, and I share my research on the companies I like and why I like them. Today, specifically, is our price analysis day, and this is a day where we combine what I've learned with our special guest, Paul, joining us from DevvExchange. Now, Paul has 30 years price analysis experience analyzing charts, and this is a fun time looking at the price movements of what is happening to see what might be cheap, what might be real cheap, what might be expensive, and what might be about to explode. Do note, if you're looking to be part of that 5% that makes life-changing gains, join our Patreon. There's a link to that below, and that will give you access to our Rainmaker private Discord. Surrounding yourself with people who have learned and are learning to do things the right way is exactly how you get good at this. Well, make it rain on that like button and strap in for this show and help me welcome Paul from DevvExchange.
Hey, how's it going? It's been a couple of weeks. Things have gone a bit crazy. So yeah, we should really be looking carefully at the charts, see where we are.
Yes, we have a tight timeline today. We only have an hour from when we started the show. So, Paul, why don't you jump into what you've been looking at in this week that you, well, 2 weeks since we last did this show.
Yeah, absolutely. Yeah.
And what are some of what you're seeing?
Yeah, so basically the main kind of risk on signals, the macro kind of bullish signals are there still from the outside. and the equity market's going up. We've got, as we start off with the Dow, that's still in an upward trend, and people are still fighting that. The S&P's consolidating here, maybe close to a correction, but things are still going up. Nasdaq still in a consolidation, not quite a top yet, but it could go either way, to be honest. I mean, of course it can either go up or down, but the main trend is still up. And we had that with the Japanese stock market, where it was in this position and everyone was saying it was a top, and it just kept going higher. So if this is still in this area by next week, maybe the week after, I think this could be indicating a top and things will start to come down. But for the moment, things are moving up. What was very interesting from 2 weeks ago was, especially talking with Chris, or our kind of discussion through the chat with Chris about the gold and silver markets. And we were indicating that we're getting near the end of, potentially the end of a move, and looking for signals that the market had got overdone. And you know, because the market was moving at such a crazy clip, that's usually a trend ending signal. And when it ends fast. And, you know, we got this parabolic move and then this big correction, which has now put the silver and the gold market into a consolidation. That means that people who have bought it or shorting it or whatever, or whatever side of the coin, there's just too much vol. And I don't think it necessarily ends the long-term trends, but it does mean that things need to just calm down a bit. And I've said a few times that when the market goes up too fast, that's not a good thing. It feels like a good thing when you're in it, but actually it's really not, because big moves up eventually. And I'm not saying I will, you know, try and pick those points, but I look for the signs that we're getting too far, and then we get certain patterns that can occur in a day that indicate that the market's going to turn. Unless you're kind of following it very closely, it's very difficult to kind of communicate that. But the market has come down and it's corrected some of this move, but the trend is still up in gold, and the main trend is still up in silver as well. So I think after a period of consolidation, we'll probably see, you know, the trend resume. But for now, I think that's like not one that I would, if I didn't have a position, I wouldn't want to jump in. I'd just be waiting to see. And other, you know, metals are in the same situation. The dollar still seems to be going down, and the trends are looking pretty good. The DXY is still negative. You know, may have a consolidation of, you know, short-term rally again, as it's never a straight line until it becomes a straight line. Usually the straight line moves are the last parts of it. But what has been very weird is we've had all this bullish information coming out, you know, risk on, all equities moving to new highs, even bond yields, you know, US 10 years have been coming down. And I'll just show you that. US 10-year yields has been, you know, let's just take it off the log scale so it looks a bit more realistic. So you can see this was starting to move up, and everyone's saying, you know, 10-year yields, they're moving up too fast and it's going to cause a big problem, and it's people are selling America. And it's actually just dropped all the way back to 4% in quite a big clip, which in some ways that's a good sign. I mean, it means that the market is not actually starting to worry about US assets. You don't really want that situation. That will become a problem, perhaps not this year, maybe next year, maybe the year after. We'll have to see. But disaster averted there compared to the way the Japanese yields have been moving up. But, you know, yields have been coming down, and the dollar's been going down, and equities have been going up. And yet, despite all of that, you know, these positive factors, the main cryptocurrencies have been falling. Now, I think the last time we looked at it, we were in this consolidation, and it kind of broke up and then was caught in this compression, and we were waiting for a breakout. And there's not much more I could say about it at that point, other than we needed to wait for it to kind of give a signal as to whether it wanted to go up or down. And to be fair, sentiment was already pretty low, which is usually an indication that the market wants to go higher, and we're reaching kind of saturation points. But that doesn't guarantee that the market will go up. It's just one of those indicators, of course. And since then, it's fallen very hard. And I guess the $64,000 question is it at a low? Is this it? You know, and look, it could well be 60,000 big psychological level support going back to these highs over here. The way it's done it, it's gone in a very, very sharp move, which is usually indicative of a spike with high volume. But those signs need to be coupled with further evidence of a rally. And there are some, I mean, we're going to look at one today. There's an interesting chart on kind of on MATIC that's showing that it's made a short-term low, and whether it's a long-term low, I'm not sure. But again, we just need to look for the breakout signals that indicate that this is hit the low. But at the moment, this is a triangular pattern, and triangular patterns are normally continuation, which means that would normally indicate the market would keep going down. So in the short term, I'm not really sure, to be honest, and that unfortunately that is what happens sometimes. But the trend lines that we can draw are now kind of fairly clearly negative. So now this needs to, from a structural point of view, needs to break over this line. This is the line that we're drawing from the highs. And if we look at the trend rate, it's accelerated from here. So, you know, in the same way, when the market goes up too fast, it needs to consolidate and you get reversal. I think the same could be said here. So I want to see how it trades around here if we make a bigger base. But what is clear is that if we go to the sentiment, now why is it gone? I thought we had sentiment up here, so let's just reject all of those and see what it does. I thought we had sentiment on here. No, it was on CoinMarketCap, of course. Here we are.
There we go.
Yeah, extreme fear. I mean, we're on 12, so that does indicate some sort of relief rally, you know, should occur. But I think it also means that if I would step in personally, I would think I might have missed it if I'd been looking to go short. Better signs, better times to be doing that. This whole thing has been put in the context, I think, of where we started. You know, we started a long way down. We started down in this area here. For context, you know, we were talking about the rally starting from here, and at each point when the market was saying it was too high, that was wrong. That's why I will always push the trend, and I'll push the trend until the market, you know, starts to fold. And it started to fold a bit here, and we got a short-term top. But the way it's gone down, it now, I think, needs to prove itself on the upside because it's fallen aggressively. And this is the kind of impulsive trend that we're dealing with now. This is, I think, the most aggressive downward trend we've had since the start of this move. So what that does is it kind of changes the outlook in the sense that it means that instead of saying, well, we're in an upward trend here, and therefore every dip is an opportunity or pullback is an opportunity to buy, and we go with that bias, it's changed it to, well, actually now the market needs to base and have kind of more consolidations, more reversal patterns, and it needs to tripwire some, you know, technical signals, some bigger technical signals to indicate that the upward trend is going to resume. So I think what this shakes down to is, in the short term, it looks oversold and we'll probably see a bounce. But whether that's enough to actually change this trend and get back over this trend line is not clear at this point. And I wouldn't rule out further downside, really, going into the next few months. So it certainly started off as being quite volatile, a kind of volatile year. But what is puzzling with all of this is the kind of risk on themes are still there. So the market must be seeing something. There must be something coming out that's changing opinion. And I mean, people who know a bit more about American politics, maybe they can see, or maybe they can tell us. But could it be anything to do with, you know, Trump, and maybe he's going to go, and maybe they can see that as very negative? I know it's a 4-year term, but they're midterm elections that can change things. I mean, I'm not a politician, but I'm just saying there seems to be some kind of negative factor that's playing into this that doesn't really look like it's a liquidity thing, because equities are usually the first to move, and they're still like moving up, and risk on stocks are still moving up as well, like banks and some of the real estate. Not all, that is fragmented, but they are moving higher. And it's not an interest rate thing, because at the moment interest rates aren't moving up and long-term rates aren't moving up. But
Question, do you think maybe it's some manipulation by big players? And so we had a conversation with somebody in our private Discord that are rainmakers. So people that join the Patreon, they get access to our Rainmaker private Discord. And sometimes we bring guests on there for behind the scenes talks. And we had a guest talk to us that one of their contacts with a really big bank that everyone would know was telling him that February was going to be really like the bottom for Bitcoin. And at the time, it didn't seem like that would happen. And the indicators were looking good. And that what they said is there's a lot of big institutions in the US that are really mad that Gary Gensler at the SEC caused them to miss out on crypto. And when you miss the boat, when you're a regular player, you miss the boat. But when you're a really big player, you call the boat back to shore. And that February would see a bottom for crypto. And it seemed like at the time, I was like, there's no way that will happen. And yet that has played out exactly. And it's contrary to everything else that's risk on, where equities are higher. Like it seems like everything's going up. And yet crypto has been massively pulled back despite really signs being bullish for crypto, like fundamental signs. And yet crypto has tanked, scaring a lot of people because they look at the charts and they're like, this doesn't make sense. And whenever something doesn't really add up, it's because we're missing some pieces to the puzzle. Yeah, there's some information that somebody knows that's not generally known. And like you were saying, as you were trying to figure it out, is it President Trump is going to step down or something, or what big news is there? Because something has been pushing this down that, isn't necessarily public information that everyone else seems to know. And I wonder too, if it isn't this. Let me share something that's been on my mind. So Dale in our private Discord, he does a lot of research and shares his research all the time. And this is one of the articles he shared with me. The Fed will be injecting $16 billion in liquidity in 2 days. Now, quantitative tightening is over. Balance sheet support is back. Rate cuts are coming. Every major asset class has already responded. Stocks, real estate, commodities are pushing highs. Crypto hasn't moved yet. That gap is the opportunity window. And if you look at this, I don't know if people watching this on their screen can see it, but it says operational date on 2/17/2026. So yesterday, they were buying 8 billion. So their plan, this was part of their plan before yesterday. So yesterday, if they followed this plan, they were going to buy 8 billion in short-term bonds, 1 to 4 month maturity dates. And then tomorrow, another 8 billion. And then on 2/24, another 8 billion. On 2/25, 6.6 billion. On 3/3, 8 billion. On 3/5, 8 billion. So this is signs of quantitative easing and money coming into the markets. And I wonder if, like we did see a flip recently to quantitative easing, that the Fed said that that's what they were going to do. And they started putting some liquidity into the markets, but it hasn't really hit yet.
Yeah, I mean, look, it's definitely possible. I mean, anything's possible, I guess, but the way the market has retraced so aggressively, and like you say, I mean, it's a plausible story, but the trouble with these stories is I've got no way of proving them, and in the end, the market has to respond. And I think what's fair to say is the market has fallen fast enough, hard enough to a zone which is of support. And I think even if you were trying to buy the dip, you would have got kind of, as a short-term trader, I don't know how you'd be holding the position, because it would be very silly to be doing that. You can't justify holding these, the market when it falls this fast. It needs to stabilize, and it looks like it's potentially stabilizing here. So we'll just have to see. I mean, we've got some Fibonacci support levels come in. It's gone through the 50%, which is the 72 area, 70 to 72. I mean, it's not exact depending on what data you're using. The next level is at 57, which you got close to, but not quite. So usually these levels are there or thereabouts. I mean, you see how the 38.2, it went through it and then it held that and held it and held it. But then when it broke it, that was when it really moved. And if we look at the ETH as well, I mean, from when I was last on the show, I was looking at this continuation pattern, and it needed to break out of that, and it broke lower. And that was the kind of signal that things weren't right, and we we're going to get a broader move. Because what we've seen over the last few months is definitely a play between the majors, which were holding up really well, and especially Bitcoin trading all the way up to 120, and pockets of strength in the alts, and the alts hadn't moved. So it seemed like maybe the alts were leading this move down, and maybe things are flipping and the alts will lead the way up, strangely. I mean, I don't know if that's definitely going to be the case, but certainly the way you'd normally expect it is Bitcoin would move up, and the majors move up, and then people flip out of those and go for the riskier stuff. And what we saw on as a broader trend was that the majors moved up and the alts didn't, and actually they went down and were in quite severe downward trends. So now the majors have moved down. It's like, well, what is going to indicate the end of this trend? And no doubt there will be another bull phase. I mean, there will be, because I don't think it's an asset class that's necessarily going to go away. And it's like Marmite. You speak to people and they either love it or they hate it. Most people just don't really understand it. But either way, it is a technology, or the main technology is one that's so groundbreaking and new. I can't see how it will disappear as a technology. There's so much that can be done with it, and the reason why I'm saying these things is because lots of people say, well, it's a Ponzi scheme, and it's, it doesn't pay a dividend, it doesn't do anything. And those arguments are always brought out when people don't really understand what the product is. I mean, you could say the same thing about gold. You say the same thing about fiat currency, unless you put it in a bank and then somebody's using it to do something else with it. So, so the arguments of whether this is, a permanent bear market or whether there'll be another cycle, I don't think are correct. It's not the death of crypto. It's just a massive correction, and there'll be another bull market at some point. It's just we've got to look for the signs that indicate that that's starting. And if you look at the major charts, like say ETH, the one that I've got on here, we've had these corrections and the lows are still high. If this becomes the major low, then it's still possible that things will, move back up. And this is a big consolidation that in a few years' time we'll be saying, look at that, and it's trading at like 12 or 15,000. I'm not making that as a prediction. I'm just saying that's fairly typical of a market that's a new market, and people don't know how to value it. But in any case, the signs of liquidity or the trend ending signals that I would have expected for markets like this and at this point, given the way everything has gone up, is that I would expect everybody to have been all in and, shouting from the rooftops about, how amazing this asset class is and how easy money can be made, which is similar to the dot-com boom just before, a few years before the bust. And it got really crazy in the last year. So I still think that's possible. It's not the end. It's not impossible, but it just seems, I suppose, a bit less likely given what's happened now. But you know, I still I've not seen any major trend not end like that. They all end with like massive you know, public involvement and people who don't know what they're doing, and um you know, a lot of kind of news flow around it, and a lot of spillover money into other things. And it's just, it doesn't feel like we had that crazy sentiment. I mean, we got some of it in gold and silver. You saw how that was going. You see how long people ignored that for, and then it was right at the end that it was, everybody started to talk about gold and silver. It's that sort of thing is the kind of signs that I would be expecting, and we didn't really get that. We did get it in Bitcoin. When I say get it, I mean Bitcoin made new highs, but there was no kind of sentiment follow through with the other you know, more risky products. So we'll have to see. I mean, it's, again, it's, for me, it's like the market is tells me what it wants to do, and I try and follow it and try and look for the signals, and so we can't tell the market what to do, unfortunately, even though people say that the charts dictate what happens. You know, people look at charts and they trade. It doesn't work like that. It's people buy things that they want to buy, and the chart reflects that rather than the other way around. There are a lot of people who trade on charts, and there are a lot of people who look at charts, but the way I would describe it to you, it's like people who take photographs. You know, two people will take a completely different photograph of the same scene because they're looking at it differently, and it's like, it's how you view it and how you analyze it. It can be completely different from the same chart. So to say everyone is doing something is a bit of a generalization that I don't necessarily agree with. But in the end, you know, this story would be, we'll see very quickly. I mean, it's February, middle of Feb. We've only got a couple of weeks. If it's going to be the low, then we'll know pretty fast. But it does feel like short-term lows here to me. A short-term low would be very reasonable for where we are, but a longer-term low, I'm just not sure. It just needs to do a bit more work.
Yeah, it'll be interesting to see how the next couple months play out. But I think about things in like the greater like scheme. So crypto is fairly new. So the first real bull run was 2013, which mostly Bitcoin, and there were a few altcoins at the time, which were mostly just offshoots from Bitcoin. 2017 saw your first real altcoin run. So Bitcoin ran at first, and then the altcoins ran. And that's when this thesis of the Bitcoin halving drives this cycle, and the Bitcoin halving happens every 4 years. We saw a repeat of that in 2021, that Bitcoin really drove that. At the same time, money supply also went high, but none of us really realized the correlation for the altcoin market and the money supply being so correlated, because we thought it was still had to do with the Bitcoin halving. Well, we saw the Bitcoin halving in 2024. We saw the commensurate rise in Bitcoin through 2025. Not as high as I thought it should have gone, but still pretty high compared to its $14,000 lows. It went to 126,000, which is considerably up from its lows. Like, you know, what is that? 11x up from its lows. But most of the altcoins hadn't run, and we also didn't see this parabolic move where the public gets involved and everyone's talking about it. And like you said, that's usually what signals a top, and yet that really didn't happen. And yet we've had massive pullback since then. Bitcoin coming down over 50%. A lot of altcoins at punishing lows, trying to see what's happening. I think it's a lot of it had to do with we didn't have the money supply growth the year after the halving like historically we had. A lot of that is coming this year. And this big pullback in crypto, I wonder if this isn't big players bringing the ship back to the harbor so that they can load up at cheap prices in advance of, I think, the crypto bill, you know, before the Senate and the House, I think it gets passed. And I saw a Democrat senator talking about how there's no way this doesn't pass. The crypto lobby has like 180 million of dry powder, and no politician wants that pointed at them in the upcoming elections. I thought, that's really good insight. He said a lot of this is just posturing back and forth, but it's going to get passed. So hopefully the Clarity Act does get passed. I would really like to see stablecoins being able to pay yields on them as part of that. And that maybe this is a setup for it to boom and liquidating all the leverage that was out there. And there was a lot of leverage. And I've seen that before, that it liquidates all the longs, get sentiment flipped really, really sour before it then goes big. But we'll just have to wait and see how this plays out. Like Paul said, this may not be the low. This might be a short-term low, but it may go lower than this too. Let's take a deeper look now at, let's look at some of these altcoins. These ones have done well this last week, and let's see what their charts look like.
Yeah. So so this is MATIC, and if we can look at it in two different ways. We can start off with the big picture and then look at the shorter term chart. But I'll start with the shorter term chart first. This is how I kind of looked at it first and thought, oh, that's actually a massive percentage move. It's had a big rally. There's a nice trigger level here at 11 cents. If it gets through that, then the next run up level is this key 15 cents level, which actually ties in with this downward trend. And it kind of ties into what we were saying about maybe the market's oversold here and does generally need to have a bounce. But if you take a step back and then look at the big picture, the downward trend, main downward trend line is here. It's accelerated off here, and then it's accelerated again off here. So to call like a major low from this sort of trend requires quite a long-term consolidation, like of the order of a few months, at least 2 or 3 months of sideways price action, sometimes more. I'm not saying that's impossible. I'm just saying it hasn't done it yet, but it has had a very decent short-term rally. But one rally like this, even this rally here, was that enough to change the trend? I mean, it punctured the resistance here, but it just didn't do enough to change, break this trend line. And so at least one of these has to go before I start saying, okay, yeah, it looks like it's made a major low. And now, time is coming in for a longer term upward trend. So the way I look at it technically, I would be buying it much higher. Whereas I guess, people who are dollar cost averaging into a market that's falling, maybe they'll get it at better levels if I miss it. But it's got to work for your own kind of method of analysis and how you want to hold positions. And for me, I'd rather buy something that's kind of roaring up than something that's kind of going down and then just having short-term rallies. So it would have to be a wait from a long-term perspective until this trend line can go. But I can see scope for a short-term rally. So week to week, we might see this go higher. Now, considering it's one of the major players, it would be nice if this is starting to indicate, the end of this bear phase with some of the other majors doing a similar thing. But we'll have to put those pieces together when we've got a bit more evidence in the next few weeks. So we'll see how things play out and where the liquidity will be. But for the moment, I'm going to say short term looks like it's going to rally, but long term, I can't be confident until we get more of a basing pattern, or at least this downward trend line to breach.
Yeah, I really wish that these histories, when they changed the name of it, that it included like the old price. So you can see how Polygon went from like half a penny or even less than half a penny to its roaring highs that happened in 2021. And then like we're not seeing all this price history. Maybe CoinGecko will give me a better view of it, because I like to see the full price history. No, CoinGecko isn't showing it to us either. All right. So Polygon has had a severe pullback, and that's what we're looking at here. From, this only dates back to 2023, so this doesn't even show the 2021 prices. And generally, if you were able to see that, you would see it's just a big slide during the bear market and a big pullback. Now, Polygon was one of the first EVM, third generation blockchains to really be compatible with ETH and to take some of the pressure off ETH and be used. There has since been a lot more competition in that space, but Polygon's probably cemented itself that it will always be around, and it does have lots and lots of traction. And yet it's come down and gotten a lot cheaper. Its market cap coming all the way down to just over $1 billion, which is a heck of a deal. It's out of the narrative. Most people are not talking about it. And I think this is at value price. Now, I'm not buying blue chips. If I were buying blue chips, I would probably have an allocation in Polygon. I like the people behind it. I think they're major industry players, and that this has a good future for the long term, and probably during a bull run will do quite well. I'm in riskier plays than Polygon. So even though I rate this as a buy at these prices, not actually buying it because I am in riskier plays than this. Riskier plays that can see more downside, but also more upside when it does come together. All right, let's take a look over at Cosmos.
Yeah, Cosmos. Not a huge amount of history here, but again, that could be, well, actually, a few years is not bad for a altcoin compared to some of the ones that we've looked at. But there may well be more. I'm just not sure about that. But where the trend is, it seems to be fairly clear to the downside. But what's nice about this particular chart is we're at the second, or the kind of home straight phase to potentially creating a basing pattern. And if we look at this level here, 1, 2, and then a break of here would create a base, a very short-term base, which means it's not necessarily a massive trend-ending signal, but it's enough to have a rally, a decent, percentage rally from a short-term perspective. But we do have to look at the downward trend, which is still here, and from there to here as well. So this area here is interesting. It hasn't broken yet, but I would say the momentum looks like it is going to take it out. And I would, if I was short-term trading it, it might be tempting to buy it. But I think from a long-term perspective, again, it's just got a couple of big barriers in the way. One being the downward trend line, the other being this resistance point. So the short-term upside from buying it here, how far it could go, would be into this zone before we're kind of hitting some fairly chunky resistance. If it gets through that, then brilliant. We've seen this happen where things just go up and they squeeze, and that's always a sign. And that's how looking at charts can be fluid. You can say, well, it's a short-term buy, but then suddenly it becomes a massive buy because it moves really quickly. Or on the other hand, it doesn't. It just sort of peters out, and then it hits the trend line and starts to go down again. And you have to get out of the position. So it's all a probability. It's probability that's kind of obviously moving with time. Nothing's static, and that's why you can't sometimes say definitively at this point it will definitely go up and continue to go up for X amount of time. It's like it doesn't work like that. Then, but in the short term, I can see why you want to look at it, because it is making a short-term base, and that's enough to perhaps take it into this zone, which is a fairly decent short-term trade. But from a long-term perspective, it's still not doing enough for me to be convinced that we've hit the low, and especially given that the trend has been down for some years now. So I would say long-term it's a wait, but definitely interesting. We should come back to it and see how it's traded in the next few weeks, see if it's got through definitely this 345. If it's got through that, then you'd have to sit up and listen, because that means it's, it's doing something very unusual, and we wouldn't want to miss it.
Cosmos is one of the projects out there that I really like. My understanding is Collect Chain, built by Dr. Profit, who changed his name to Dr. Collect, working with VV and moving over VV's collectibles, NFTs/collectibles, over to Collect Chain that is built on Cosmos. Now, during the bull run, you can see that Cosmos did very well. The early part of the bull run, when it peaked in March and then April, it went to $27. Then it came back down. That July was pretty brutal to crypto. And so it went from $27 all the way down to $10, and then way back up to $40. Well, now it's come back, hitting recently under $2. So that's a 95% retracement. And this is why, like, I believe in taking profits during the bull markets, and then buying as things get cheaper again, because the swings in crypto are so savage. And even if you bought early, and say you sold early and you sold at $25, being able to come back here and rebuy at $5 is a really big discount. Now, it recently bottomed at under $2, and it's $2.40. This is a nice buy zone on what I think is a really good longer term blue chip, Cosmos. So as I discussed before, I'm in riskier. I'm buying riskier ones in Cosmos. If I was buying blue chips, probably I would have some Cosmos. Like, I like this one. I like their technology. I like that there's a lot of chains that are built on their SDK. So I think that Cosmos is going to be around for a long time. And as the bull run hits, it will come back into the narrative. So as altcoins really take off, and I think that's still coming. We didn't see that last year in the quote unquote bull market, as some people are saying. It was a weird bull market. We didn't really see that parabolic move. Even on Bitcoin, it hit a little bit of it, but definitely not on the altcoins. And I think it hasn't happened yet because it's still yet to happen. All right, let's take a look over at AAVE, which is the premier DeFi token. And let's see what's going on with AAVE and then Night. We'll look at
So, yeah, so this is, like, again, a nice little short-term pattern that looks kind of bullish, which is nice, really, given how everything else is looking, or the market is sentiment is so negative. But short-term inverse head and shoulders. So you've got left shoulder, head, right shoulder. You've got small double bottom there. It's a small pattern. It's not a big pattern. But what we're getting is a buildup of resistance on this 131 level. So in order to complete, it needs to go through that 131. But this little compression here is usually a sign that the market is getting ready to go and should go within a couple of days. If it doesn't go by, the end of the week, or at least the weekend, then the time frame is gone on perhaps too long, and it's not going to work. So it could justify a short-term buy here on the basis of that pattern and maybe this developing upward trend. But these are kind of what I would say is very short-term, and ones that I would be looking to get out quickly if it doesn't work, and not with very big positions at this point. And the reason for that is that structurally there is, again, more work that needs to be done from this downward trend here, which has been 1, 2, I guess close to there, 2, 3 points, and even accelerated here. It needs to get through that before it is starting a new impulse phase. But I do like the short-term pattern. So this is the potential base that could eject it through this downward trend line. So that's why I think this is a good one to look at. It's a good choice. But if we take a step back now and look at the weekly chart, which is also very important, to see where we are on the big roadmap, and it's still range bound. Now it's compressing, which over the long term is a good sign, because it means at some point we're going to get a breakout, and a big breakout, not a minor breakout, a major breakout. And if it can get through this line and start playing in this area here, then the line that it needs to take out is this resistance point. And if it's a sector that's running, which would be nice, then we could see some considerable gains. But there's a lot of things that need to happen there first, and they're not definites by any stretch of the imagination. We just need the price action to confirm it, and these are the stages. They're kind of staging posts of what the market needs to do. So if we look at the weekly chart, you can barely see that reversal pattern, and for a major low you normally need some form of pattern that you can see on the weekly chart. But in any case, that doesn't discount the fact that there is something there on the daily, and if it was to just jump up in quite an aggressive short-term move, that wouldn't be a surprise to me. But the resistance is clear. You got 143, very big resistance point, and the trend line. So how much beyond that, even if it does go up, is unclear. So again, it's a similar pattern. Long term, it's just not clear as to whether it's going to go higher and move into a bullish phase. It's got some key resistance points to break through first before we can confirm that. In the short term, it does actually look like it's making an interesting reversal pattern, and it should go higher.
So it'd be a very short-term buy, possibly a little bit,
and a long-term wait. Yeah.
Yep. All right. So what's interesting is I'm hearing a lot about AAVE from big institutions looking at it, and they're really coming to understand the beauty of DeFi. And sometimes with some central exchange failures, they're looking at what AAVE's done and been like, wow, this model is impressive. And I've heard that some big players are picking up AAVE and some are thinking of picking up AAVE. And that might be what's signaling this possible reversal in the charts. Overall, it was 2021 at $500 $503 here, and it's all the way down to 126, so it's 75% off from those prices. Pretty good price, not as cheap as it got during the bear market, where it came all the way down to $55 and $52 here. But yeah, this is definitely in the blue chip category at almost a $2 billion market cap, and I keep an eye on this one to tell me what's going on with the DeFi space. DeFi really hasn't had a really big run since 2021. It didn't have a bear market period where it ran quite hot. It did come up, AAVE in particular, did come up here in late 2024. It came all the way up to 353, but it didn't come up to its previous highs yet. I think that's still ahead for AAVE and for DeFi in general. So it's pulled back significantly from the highs of late 2024 and was that August 2025. But I think it's got some good momentum ahead for it, is my guess. Am I buying AAVE? Like I said, I'm in the riskier things. So I hold like Definity's token in the DeFi space, and I hold some other tokens in the DeFi space that are much, much lower market cap, so therefore higher risk, but also potential higher upside potential. Chain is another one I hold that's market cap has been very punished, but I really, really like both of them. So do I hold AAVE? No. If I were buying some blue chips, I would just have a little bit of AAVE. And yeah, I'd be diversified across about 30 different blue chips if blue chips were my thing, and AAVE would be one of those. It wouldn't be in the top 20, but probably be in the top 30 of my holdings. All right. Let's take a look at night, and then we'll see what kind of time we have to see if we have time to look at any other ones.
Sure. Yeah, night is excuse me. It's another one of these short-term reversals. Actually, it's looking pretty interesting, really. Now, I'd like to know what it does, because we had this downward trend that chewed it for a bit. It's broken out. This is now the new kind of defining trend. It's moving higher from here. So we have got a developing upward trend. And I would say, I'm just going to get rid of that just a second, just keep the chart a bit clearer. But we've also got a potential reversal pattern here as well, left shoulder, head, right shoulder, which means if it can get through this area here, this little consolidation here, which would bust this resistance, then then we'll be looking at perhaps a decent trend. I mean, it's already developed and it's already holding pretty well. So excuse me. So yeah, for me, this is interesting enough for a short-term buy, as long as we stay above the trend line. And I think a reasonable place. I have had a bit of a chest infection. It's now making me cough, so I'm not. I'm trying not to cough because it'll start some kind of coughing fit. But let's see if I can get through this bit. If it breaks this level here, then that would be where I would get out. That's the correction. Maybe give it a little bit of room, but quite an interesting chart. It's broken the downward trend line. It's making a new upward trend line. So I'd like to know a bit more about it, and we definitely should come back to it as well.
Yeah, I like Midnight a lot. It essentially is the privacy token for Cardano's blockchain. They actually recently announced a banking partner, Bloomsbury Money, who you might know. Anyway, so they did a banking partnership with Definity. I think that was announced like 3 weeks ago or something. Definity's bank, Bloomsbury Money, which is an interesting development. Now, the token price has gotten punished. I saw Charles Hoskinson talking about it, and people were complaining, which happens every time token goes way down. It reminded me of back in 2019 and 2020, where Charles Hoskinson was dealing with huge amounts of FUD. We're right back into that kind of market again, both with Cardano and in Midnight's token being down. Though most of the people who got Midnight, they got it as an airdrop. And so are they really down with a token they got for free? Now, even with it being down, it's a market cap of almost $1 billion. So already this is in blue chip territory. It looks like 16 billion of the 24 billion is already in circulation. Let's see if it gives us an idea of more vesting. It does not, but it looks like...
Oh, you're on my screen?
Oh, shoot. Good call. I'm looking at to see if there's some vesting, and there's not showing any vesting in CoinMarketCap. To show top wallet holders, looks like this one holds 127 million. Okay. 45 million here, and those are probably some foundational contracts. And then the next biggest holders, here's some big whales holding quite a bit of it. So it's all the way down to 5 cents. And people want to know, is this going to do well? I don't know. I do know Sale in our private Discord has been following Midnight and what its usage is going to be and what he likes about it quite closely. I like Charles Hoskinson. I think he's very, very smart, and he takes the time to develop things well. So I'm a fan of Midnight. Now, I hold some Midnight token because I got it through the airdrop, and I'm just waiting and watching to see what it does. Am I buying at this price? It's too recently out for me to know if this is a cheap price. And there are so many things that I feel I have much stronger indicators that the price is really cheap, that's where my focus is, not on this. So I just have a hard time telling if this is cheap or not for it, because there's not a lot of history in here. And I like buying when I feel certain that the price I'm buying at is cheap, especially when there's so many good alternatives right now that are so price punished on ones I have a lot more history on. All right, so we do have just a minute. Why don't we jump in and take a look at Fowler wants us to look at Luxo. LYX, he said, is the ticker symbol.
LYX, yeah. And just to pick up on Chris's comment, yeah, we were talking about it offline. It's funny how every time I don't come on the show, the markets just crash. It's really weird. It's got some weird correlation. But as they say, correlation and causation aren't necessarily the same thing. But I have to start looking at whether there is some weird, weird reason that happens. But anyway, so yeah, the chart for this, unfortunately, is still looking a little bit negative. And as we kind of start from the last major high and draw out how the trend has been developing, I mean, actually, it's even if we go back from here, we've got a bit more data, haven't we? So the trend has been kind of increasing in speed to the downside. That's what you're seeing here. And that usually happens until you get that kind of climatic move that indicates that the market trend is over, and then it gets too cheap, fresh buying comes in, and you see the trend slow, go sideways, and then start to go up again. We are, as you can probably guess what I'm going to say by the way the chart looks, we're below the fastest downward trend line that we can draw here. I would call that a resistance line. But the volatility is picking up, and that sometimes indicates that the market is, you get this kind of battle between the bulls and the bears, and people who are just throwing in the towel against people who are going, wow, this is a bargain, and the market swings around, and then we get the true direction that comes out of that. Now, there's not enough volatility to indicate that this is the low, so I can't say that this is a buy. So headline for me would be that it's a wait at this point. But some interesting points on the chart that I would be looking at is we're almost at 100% retracement of this move. And usually when the market gets back to 100%, you get some sort of reaction, and it's starting to react close to it. The volatility in the chart is picking up. We can see that compared to the way it's traded before. These swings are much bigger than the swings that we've seen here, like on a daily basis. So perhaps that's indicating that there's some buying going on, but we still need to see an impulsive move that then generates the base for the trend, and that would be the real indication that the market is changing its dynamics. What you look for is a weekly bar that comes outside of any of the ones that we've seen prior and pushes through some decent resistance. So for me, it's a wait, but always happy to look again and see whether it's changed its dynamics, moved through this trend line, and giving the first signs that indicating that we've got a more substantial trend. And I take my hat off to people who will look at something fundamentally and say that's definitely cheap on the fundamentals, and then step in and know when to buy from that perspective, because I can't do that. For me, the chart has to tell me. And so I kind of resist buying things just because they look, inverted commas, cheap, but I can certainly understand that there are opportunities that I will miss because of that. But we've all got different ways of looking at the markets, haven't we? So
Yeah, taking a look deeper at this, just looking at what Luxo is, it's a blockchain built for social culture and creators, created by former ETH developer Fabian Vogelsteller, the author of ERC20 and ERC725, as well as the developer of Web3.js and the Mist browser. Okay, so significant history on this guy in the crypto space. So he's a bigger player. They're absolutely price punished, which buy low, sell high as part of the principles of making money. And how low does this go? Well, I wasn't able to get information on the token vesting. So let's look at this. The total supply is 42 million. The circulating supply is 30 million. So a lot of their tokens are in circulation. I did check CoinGecko to see if we have a better price history, and we do. So the price came out probably shortly after launch, went to $6, came down a little bit to $5, then jumped up to $11. And this was just 2024. So 2 years ago. And then it's just gotten savage since then, which we like cheap. We don't like buying at $10 and then having it go to 30 cents. But now, you know, it's done this nice climb, and look at how it's slowing down here. So I like these nice rounded bottoms. Remember when we were looking at midnight, we just didn't have enough track record on it to see something like this going down. So I like the background of the founder. I haven't followed this one closely, but this is probably one to look at. And I like to see this kind of price movement, that this is maybe a good point to start dollar cost averaging in for those that are interested in this project. I like these lower cap projects at a $10 million market cap, because if they go well, things like this can go into the hundreds of millions of dollars of market cap, or even billions. And say it went to a $1.1 billion market cap, that would be 100x return from here. So that's why I like the riskier projects with the lower market caps, because even if they don't become the biggest chain in crypto or anywhere near it, when a lot of momentum hits, something like this can go to $1 billion market cap, which would give you 100x easier than Bitcoin could 100x its market cap. So that's why I like these riskier ones. The upside potential is so big if it does catch on. Interesting project. I would rate this as just like a small buy, and then I would be looking, hopefully it continues coming down even more as it's following this trend and probably not bottomed yet. Cool. Well, Paul, we missed you. Chris said, yeah, Paul, if you could forward us your calendar, that way we know when to sell everything and go short. That'd be great.
Absolutely. Yeah. Well, good to be back, and thank you for the comments. Have a great week, and we'll see you next week.
All right. We'll see you, Paul.
Thank you very much.
Now, it's all right to feel totally depressed, because crypto market prices, they do this kind of thing. And you hear all these voices that everything is over and that this is the end. And it usually isn't. I know there's so many videos out there that we're in a bear market, but just this thing in me that's like, we didn't really hit the peak. We didn't hit that everybody talking about crypto moment that comes with the bull runs. And so my thesis is that's still ahead for us. Now, that's how I'm trading. I'm just waiting I'm fully deployed in crypto, and I'm just waiting for that. And will it come? Well, the odds are good that that's still ahead of us. And we're seeing the right things line up, in my opinion, with money supply growth coming ahead of us. So it's already starting to hit, but that usually puts a lot of money into risk on assets. And you may say, well, shoot, it's going everywhere but crypto. We say it's been going everywhere but crypto so far, but just because that's the way it's been playing out does not mean that's the way it's going to continue. And sometimes I know it feels like this, and this is a problem that often happens with our investments. We are so tempted to chase where the money's at, instead of positioning or holding our positions where the money is not yet at. And right now, that's crypto. The money is not yet here. That's why prices are so low. And I think you're going to find that that is the best time to be buying, because the money will redirect into something, because crypto allows the internet to really make huge advances it could not do without crypto and blockchain. And so it's a fundamental technology investment, essentially. And it's a new asset class. And what's interesting about this new asset class is when it gets focus, it gets massive focus. And all these people FOMO in because they don't really understand it. And then when it pulls back really savage. So it gets massive focus and swings too far to the upside, and then it swings too far to the downside. That's what creates this massive volatility. And this massive volatility, while it's scary, that's what creates the major wealth for those that learn to play that volatility. And when things swing really, really low, that is a great buying opportunity. And when things swing really, really high, well, that is a great selling opportunity. It's a bad time to be getting into crypto then. Well, I know you know what this rap is about. This rap, I wrote the words particularly for times like this to help people understand in a fun way, in a rap form, just how to trade crypto like the 5%ers do, the ones that make massive wealth through crypto, which I hope is you. And if you're doing it right, it will be you.
To the space, chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, right before you could, was told to buy when it was pouring like a rainmaker should. Buy when it's down, don't chase the boats that I missed. Cause I always made the time in mind. I take the one out cause I'm patient like that, and I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't leave with my heart. Principles are simple, believe in a lot. Why when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling the parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Time is never better, the time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, to study and to know that nothing comes easy but with knowledge the game show. Sticking out this wrong cause soon will come a bear market. Learning and growing and when it's slow will be the target. They say it's come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. I'm strong like that, I'll let the others be fretters. 2 years time the ball will bring back the gains. That makes it worth the effort cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, let the haters be crafting. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough. And that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck.